rotations, right? So when we compare the black line rotations, what we're trying to do, of course, is we're trying to get them in the same place at the same time. Pretty obvious, right? So you can see that actually it seems to cycle in opposite directions. So the value is becoming bearish as the price is falling, and as the price falls, the probability of a buy trade increases. So we're getting a lot more value on the market maker rotation as the price falls. But obviously in that kind of situation there, it would be nice to get the best of the value narrative. So we see that we're kind of out of sequence here. We're kind of massively out of sequence, actually, to be honest. I mean, it's opposite sides pretty much on every trade at the present moment. It's started to come back into line here. It's still a distance away from being a good buy trade, but it's starting to look a little bit better into that low price there. But if we go back a little bit of time, you'll see we actually get a probability slightly more bearish here, and we get a probability sell at the same time. So that's actually almost in sequence. And obviously this buy trade is also in sequence. So those two trades are in sequence. And you can see that this trade seems to be in sequence as well. See how we're in line now? The cycles are in line with each other. So we're getting this idea, and we can see that this buy trade seemed to be in sequence. We're still in a buy trade. We've got good value on the buy, and we get a nice little rotation. So this idea of tying in the value and the volumes and the price action sequences allows us to still take off some really nice trades. Now, I'm not saying that any of them are brilliant. None of them are. None of them are brilliant trades. But if I can buy some gold at 11s and rotate it into a sell at 13s and get another $200 and then sell it a bit more at 15s and rotate it at 12s and make $300 and then buy it there and make $300, well, that would be $1,000 in that little phase. $1,000 in that little phase between 13.50 and 14.20. And if I could pick up $1,000 in that phase, I couldn't give a flying Castlemaine, to be perfectly honest. If I can make $1,000 on a single contract in a period of about 30 minutes, and I can just add an extra second contract and then an extra 5 contracts, then I've got my trade for my entire day then at that stage. And the fact that they all go out of sequence just means that I just close down the shop, right? I just close the doors and I leave the shop alone until something better shows up, right? I just leave it alone until the rotations line back up into place, and then I take my shot at that stage. And that's all you do, and it's almost always the case. I mean, we simply do the same when it hits the NASDAQ or the oil or the S&P, as we look at the things that line up and the things that don't line up, the stories that are right, the stories that are wrong. And if everything lines up, we take our shot, right? If everything lines up, we take our shot. Yep, just walk away. Just leave it alone. We're not forced to take deals. We don't need to trade everything. We just need to trade the good stuff. So when it's not quite right and people say, what should I do? Well, you've just told me it's not quite right. Do you not know what you should do? Ditch it. Chuck it in the bin. Wait for something better to show up, right? In 10 minutes, guys. Oil in 10 minutes.